Recent official statistics released by Italy show that the Italian economy grew by 0.9% in 2023, while German growth had shrunk by 0.3% in the same period. IMF forecasts 0.7% growth this year for Italy, while the Deutsche Bundesbank only expects 0.4% for Germany. It is to be noted that the Italian economy is the third largest in the European Union. Italy is the founding member of the European Union, the Eurozone, the OECD, the G7, and the G20 organizations. The largest trading partners of Italy are Germany, France, the United States, Spain, the UK, and Switzerland. After World War II, Italy saw a transformation from an agricultural-based economy into one of the world's most advanced nations and a leading country in world trade and exports. According to the Human Development Index, the country enjoys a very high standard of living. Italy has the world's 8th highest quality of life. Italy owns the world's third largest gold reserve and is the third largest net contributor to the budget of the European Union. Furthermore, Italy's private wealth is one of the largest in the world. Italy is a large manufacturer and exporter of a significant variety of products, including machinery, vehicles, pharmaceuticals, furniture, food, and clothing, with a significant trade surplus. The country is also well known for its influential and innovative business economic sector, an industrious and competitive agricultural sector, and manufacturers of creatively designed high-quality products, including automobiles, ships, home appliances, and designer clothing. Italy is the largest hub for luxury goods in Europe and third luxury hub globally. Despite these important achievements, Italy was hit hard by the 2008 recession. Massive government spending from the 1980s onwards has produced a severe rise in public debt, 59% of the GDP in 1980 and further increased by 123% of GDP in 1994. Again, COVID-19 pandemic hit the Italian economy hard, but Italy recovered faster than any other European country. So how did Italy manage to recover and grow faster than any other European countries? Recently, Italy's finance minister Giancarlo Giorgetti says the nation's economy expanding by 1% this year, the fastest for the Euro region economies. He said a modest 1% growth rate represents a lot compared with Germany. All other economic indicators also appear more positive than they often have in recent times. Italy's debt to GDP ratio is at its lowest in nearly 2 years. The debt decreased from 155% of GDP in 2020 to 137% of GDP in 2023. The unemployment rate also hit a 15-year low to 7.2% in December 2023 compared to over 13% around a decade ago. However, Germany is doing worse because of its dependency on cheap Russian energy and deepening trade with China. And the Bundesbank warned that the process could get much worse if Chinese action, for example, against Taiwan, caused a fresh rupture in trade patterns. This is another reason Italy doing better than other European countries because Italy is not dependent on Russian energy and has less trade with China. Another big reason for Italy's growth is the role of fiscal policy. Under the Prime Minister Giuseppe Conte, Italy took full advantage of the extraordinary situation created by the pandemic to throw over 100 billion euro at improving the energy efficiency of the housing stock, largely through a tax credit scheme known as the Super Bonus. Giorgia Meloni, who has led the country since October 2022, shut the scheme down at the end of last year, saying it was an unaffordable subsidy that generally benefited the better off. Due to this policy, Italy's housing investment is up 30% compared with Q4 2019, before the pandemic, the fastest rate ever recorded, whereas investment employment growth for France, the UK, and Germany was only 4%, 7%, and 5% respectively. Italy's better economic performance than some of its peers is due to the strong tax incentives in construction, said Oxford economist Nicola Nobile. He added tax incentives helped construction actively much more than in other countries. For instance, the 0.2% quarter-on-quarter GDP growth posted in quarter 4 last year entirely driven by construction. Thanks for watching.